A certain darkness to this Beige Book. Federal Reserve districts characterize economic expansion as modest or moderate, but 4 districts described little or no growth, and 5 narratives, it says here, noted activity remained below pre-pandemic levels for at least some sectors. There were several areas where manufacturing did well. That was a good thing, but delinquencies were expected to increase. And most districts reported that the outlook remained positive, so that's good news. However, optimism waned, it says. Many contacts cited concern over the recent pandemic wave. Unemployment, better news. All districts reported that employment rose, but for the most part, the pace was slow, it said. I think this is to be expected. Despite hiring difficulties, it says here, firms raised rates for low-skilled workers. So that's good news, especially in outlying areas. So this is the first initial Beige Book after the pandemic began to surge again. And I think what you're seeing here is perhaps what was expected, some slowness in the economy. And we'll get a better report on that, I think, Kelly, come Friday with the jobs report.
All right, Steve, thank you, sir. Steve Fleeceman running through some of the headlines for us from that Beige Book. Let's get out to Rick Santelli. He's in Chicago looking at the reaction in the market to what we've heard so far. Rick?
Well, Kelly, let's lay the groundwork once again, though. This is the roadmap for the next Fed meeting, which happens to be December 15th and 16th. And, of course, we know that the last Fed meeting was a bit mired because of elections and all the political issues. And Steve's exactly right. The more I see of headlines flashing regarding the Beige Book, it's all about the utility function of growth versus need for stimulus. And that's going to be the underlying tone for the Federal Reserve, and it really comes through. And there's very little reaction in any of the markets because we all know this. The real question is when the vaccines make a difference, how the distribution goes, and, of course, all those businesses we're worried about that are going to run out of cash, playing the clock, playing against the clock. And if you look at 2 years, we're still at 16 basis points, 10s, still at 94, up a basis point, 30s kind of leading the way at 169, very close to 170, up a couple of basis points, and the dollar index hovering down 1/4 cent at fresh 31-month lows should it close here with very little volatility. So nothing surprising here, but we continue to be a little bit nervous, and I think that's why the markets are so firm in equities about what the world's going to look like after vaccine distribution.
Shepard Smith here. Thanks for watching CNBC on YouTube.